Good morning, everybody. It's a pleasure to be here once again. My name is Heritage Adisa, Markets Analyst at HFM Nigeria. And as always, we'll check through the markets and figure out what the overall sentiment is, what the big stories are, the big focus for markets, if these provide opportunities, and then how we can take advantage of it. But please do remember that this is just a communication material. Nothing in this communication contains or should be considered as investment advice or investment recommendation. This is acknowledged that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users should be responsible and reliable. Now, what we have this morning in terms of the overall market environment, yes, is a more tentative flow. Yes, a little bit positive, but I mean, marginal moves here and there. And because the major event for today is the non-farm payroll data point expected to be released later today. And that because of that kind of event, and there's really not no much going on in markets, before then. Right. I had this written down earlier. I said a non-farm payroll, the first clue for the Federal Reserve and markets, right? After their declared data dependence, forward guidance. Really. Now, the latest job data for the US will be a key event in today's session. And until then, it is likely to continue to see an overall tentative flow in the markets. Although so far the markets tilt slightly positive. You look at equities trading broadly high, albeit in small margins. As a matter of for context, now over the last couple of seconds, now this has also dropped, down a bit. You can see US was sticking up about 0.2% on the day, and still well within yesterday's range. So there's really not much there. You look at commodities as well, also doing slightly better. The oil prices just nudging up 1.5%, pairing recent losses that we've had over the last couple of sessions. So clearly, that's still not tangible enough to hold on to. Yesterday we had the Bank of England meeting. It was a very major one. And then in the meeting, the Bank of England hiked interest rates by 50 basis points, as expected, and was generally a dovish outcome because they basically warned markets that the UK is expected to go into a recession or take into a recession in the last quarter of this year, while increasing their inflation forecast about 10%, right? And then even staying in line with what the RBA gave us when they had their own meeting, I think it was earlier last um, their latest meeting, right? And then they basically said that there's really no, preset rate hike going forward, and you're always clearly going to be based on, the data point, right? Even if you didn't have to spell it out clearly. And on the back of that, the British pound, fell the president really fell across board. We're looking at pound CHF on our own chart. We'll take that particular trade, and I'll do a quick review of that before we head out. Now, so far today, because the Federal Reserve in the latest meeting had said that their rate decisions going forward would now be data dependent. NFP would be a very important one because that will provide a first look for the Federal Reserve and the market. Now, this week, we've had a couple of employment data points, sub-components, talked about PMIs, the employment components of the manufacturing and services PMI for the US. Both came out better than expected. When you look at job openings, right, job openings fell, there were less jobs available based on the jobs, prints there, and even unemployment rate, unemployment claims also increased. So that was more or less a mix, pre-NFP employment signs or indicators. Now, usually they've not really been the best gauge or best predictor, best tool to focus what NFP is in recent times in terms of the correlations. But we just have to have that at the back of our mind. Now, going into this NFP report, markets expect that this report comes out or new jobs added in the US economy over the last 1 month in July, basically, grows by about 250,000 new jobs, right? And even on the growth rates also expected to remain unchanged about 3.6%. That's in July. Now, that's the expectation. Now, if the data points comes out better than expected across all components, including average earnings, including unemployment rate, as well as even the new jobs, that's the NFP, that clearly would ease some of the recession fears, play into some of the need for the Federal Reserve to hike even faster. Remembering that in recent time, Federal Reserve members have been shouting the hike steadily. So clearly, or shouting the focus of the Federal Reserve on the inflation mandate, bringing inflation down. So clearly, that would also ease some of the recession fears and should also point to signs that the Federal Reserve could continue its fast hiking pace. Now, that is a supportive factor for the dollar, and then that clearly should pressure equity. In terms of looking at the dollar, again, something like the British pound, after the song that the BOE pulled in the last meeting to be a way to look at that. And clearly, USD pair would always be the go-to. Now, alternatively, and then some people would even prefer this particular outcome, is if we have a weaker print, right? If the number comes out weaker than expected, it sort of points in more and more and more worries about the economy, right? Markets may even be more hopeful for a slower pace of hikes, which clearly supports equities and then even weighs on the dollar itself. Now, this would be a preferred outcome because in recent time the dollar has been, bullish, and then we had the bearish outcome from the FOMC meeting, and then since we started to have Federal Reserve members come out being more positive again, right? We also had, another level, right? Another positive strength bounce for the dollar as well. So there's been a bit of push and pull, but overall, the dollar has been solid over the last couple of weeks and months now. So in this case, if we have a more, a weaker or more weaker prints, that clearly puts a little bit of pressure on the dollar, and we could see that also weigh in on the US dollar across board. Now, note that we should pay attention more to all the components of the jobs data and not just the NFP. So that's also important. But for now, so far, equities remain really changed. The FX space trades in very small ranges. USD and NZD are basically just struggling to hold on, to the top spot so far. While JPY and CHF are barely, or currently at the bottom of the majors, right? They're not really solid in terms of the convictions about where they are right now. I think until NFP, we might not really get anything major to work with. Later on, we also have Canadian job numbers also expected. So there's also that to also look out for. Even though the job numbers are expected to come in, mixed, full-time and part-time employment is expected to grow, but then unemployment is also expected to grow as well. So we'll have to see how that plays out. But I think major focus, more attention will be on the US NFP. Now, looking across board, like I said, not just long ago, equities were up about 0.2%. Now back at zero change level, well within yesterday's ranges. And then clearly until we have NFP, that basically would remain, the flow that we're seeing so far. Yes, the support level around here, around this key 41.5, but 150 rather. But like I said, we should still keep having push and pull until we get the NFP data coming around 130 thereabout. On the calendar later today, and it's basically the same thing with the rest of the US equities. The FTSE has really not been doing the best. I'm trying to look for where the FTSE is. Okay, not here at the moment. The FTSE has not really, done well as well this morning. But equities, some of them up, some of them down, and then we just have push and pull across. But now, what I want to show us yesterday on the back of the BOE meeting, we had that bearish outlook. And before then, I'd already had a penny order holding at this key 1.17 level. And from the meeting, the initial spike upside on the back of the high, activated my trade. And then we had solid downside on that particular one yesterday. Right, that's over 100 pips on that particular one yesterday. Now, having closed this, I remember always saying that when you miss the first trust, especially on a major economic data release, like the bank of a central bank meeting, if you miss the first trust, understand what the components are and wait for the second trust, usually around the 50% retracement level. Now, look at what we have in today's session. Now, we had that, downside, right? Had a downside, and then in today's session as well, we've been able to also pull back, not really getting to the 50%, but now we're resuming as well to the downside. Once you understand the direction, there's no need to, be in a hurry to fly into the market, especially when you don't have the base case planned out or the base scenario planned out. You can always be more patient and wait out for, another opportunity or a second opportunity for the downside or upside, depending on the direction for the pair. So this was what we were able to catch. I wasn't looking at other pairs, but this is one that we're looking out for. Now, for the NFP, you look at something like GBP USD, it's paid back most of the losses from the Bank of England meeting, on the back of weaker USD going into the close for yesterday, right? So there's that. So for today, we are mostly ranging. But don't forget that the British pound is still having some of that weakness still embedded. So clearly, if we have, the numbers come out even solid, clearly that should also see GBP USD make another run for the key 1.2100 level. So there's also that to pay attention to as well. Euro US is also another one to look out for. But in this case, what I would like to see would be a weaker job numbers. If a weaker job numbers comes out, I feel like the euro has also felt a big part of the push and pull that we've had over the last couple of sessions, right? The weakness has been very much priced in, and we're very much trading very close to the lows that we've seen over the last couple of years. I mean, the last time we were around this level was way back in 2002, about 20 years ago. So it's been stretched, the downside has been stretched. So if we can get a weaker job numbers, I think a pullback towards, let's look at this, a pullback towards this key area would be one to look out for as well, right? In terms of looking for that upside on this particular pair. But don't forget, it's a weekend, it's a Friday, profit taking, rebalancing, all of those remain a risk heading into the weekend. But NFP is the major focus. Good numbers will be good for the dollar, bad numbers will be bad for the US dollar as well. And then on the other hand, we could also look at it and say good numbers, positive job numbers, also signs, give signs for the Federal Reserve to also hike even faster, which is also positive for the dollar. While on the other hand, like I've mentioned just earlier, like I said, on the calendar, it's basically NFP really across the entire calendar for today. The job numbers as well. Is it Friday? Okay, here we go. Okay, here we go. A moment, please. Is this Friday? Okay, this is Monday. Sorry, Friday. Okay, here we go. Now, job numbers for the US also expected in terms of unemployment rates, and then even average earnings and non-farm payroll also here expected, and then even Canadian job numbers also expected on the wires as well. So that's it for now. We're going to leave it at that point. If you have any questions, please do not hesitate to ask, and would always do our best to help. Thank you, and do enjoy the rest of the trading session. Bye for now.